And then I'll hand it back to. Yeah, great. Just a few minutes. Many of you may already know about the collective. Some of you may not. So we're not-for-profit that's focused on climate tech entrepreneur support. There's about 593 startups that we supported so far, largely in energy and mobility and the waste sectors. The other sectors that we support include, for example, carbon tech, natural resources management, clean air, water, clean industry, etc. We've been around for 5 years. We became active in 2016 with the first solar hackathon in India, incorporated in 2018, and we've been growing since in India, Sri Lanka, Maldives, UAE, increasingly in Southeast Asia as well. If I look at the key areas of support, it is that we are focused on supporting entrepreneurs, startups, ecosystem building, funding, and very much a climate technology kind of focus. This is started by clean tech entrepreneurs ourselves. So Pratap, who was on screen, him and his brother started a solar development company in 2009, which I joined in 2010, and we built 84 megawatts of solar and wind until 2015. So quick overview of what we do. We take an ecosystem development approach. So we start with capacity building education programs, where special focus on women entrepreneurs. We have acceleration programs across the startup journey, where, of course, the capacity support we provide includes mentoring, training, investor connects, as well as corporate connects for pilots. We also provide capital and also work with a network of follow-on investors so that they can channel growth capital where we can support in seed capital. And then underpinning all of this is a strong community development effort where we try to bring in all kinds of stakeholders, at the center being the entrepreneurs, but there's the investors, the mentors, the technical experts, the government agencies, etc. So just a snapshot of what we mean when we say entrepreneurship development program. It's largely driven by the Climate Startup School. Several programs that we have in acceleration, very early stage ready, focus on women and students. Launchpad, which is a big bulge. We support 120 this year in Launchpad, 120 startups. Early stage. Runway is a post-POC accelerator, and Takeoff is our pilot or deployment stage accelerators. And then we have the Climate Angel Network, which is a syndication support platform to increase capital in this space, and the Climate Seeds Fund, a seed fund structure. And what you're part of right now is this Climate Startup Week. It's the key bulwark of our community development annual flagship event. We also have a network of incubators. We run regular workshops. We have the first climate co-working space coming up in Goa this month, and the jobs fair to bring in more people into the sector. Key partnerships, New Energy Nexus, one of the oldest clean energy supporting organizations in the world, started off with the California Clean Energy Fund. Climate Cake, which is the EU's green or climate support, entrepreneurship support organization. Started off in the EU, but increasingly having a global focus. We are the South Asia partners. Incubation Network, started by Circulate Capital, which is Asia's largest waste startup fund. Frontier Lab Asia, which we are partnering with, who is being supported by for the Climate Angel Network. It's a young and growing team, so you'll interact with most of them, many of them, in the next few days and weeks. Before I bring everyone in, just to let everyone know, these are the trends we're seeing. Last year, we had about 17 billion invested in climate tech. This excludes all the infrastructure investment that goes into, for example, solar and wind plots. So this is really getting into technology. Now, in the first half of 2021, already we've seen 16 billion invested, 50% of that in mobility. So this is global. In India, in the last 5 years, we've seen just over a billion invested, over 270 unique investors in about 200 rounds. So it's a increasingly vibrant space. These trends are all increasing and growing. And we're all keen to see where it leads us. Great. So once again, thank you for being here, Mr. Shah, Mr. Bansal, Mr. Pai. I'd like to start this off by getting all your views in individually, Maybe introduce your funds, maybe your investment thesis, the sectors you like to focus on, the stage focus. Maybe Mr. Shah, I can start with you.
Okay. Yeah, thank you, Nalin. Thank you for that introduction. And before I begin, congratulations. I think the work you're doing is phenomenal in this space. And that is what is needed to accelerate the pace of investments, accelerate the pace of entrepreneurs in this area. So thank you for that. Uh, so look, I represent Peak Sustainability Venture Fund. And as the name suggests, we focus only on sustainability. The way we have defined our mandate, and I will begin with verticals, but I will also say that we don't operate in silos because we believe everything in sustainability is connected. So we are investing in areas which represent new energy, that is everything other than fossil fuels, and then we can get into subsectors as we continue our discussion. Agriculture, but much more focused on regenerative agriculture and companies that are doing interventions than purely data management. Thirdly is water, and we have some companies in water which are doing phenomenal work. I think we have done about 400 projects in Dhaka, about 175 in Assam, and looking to do another 100 in Uttar Pradesh. So water is clearly an area of significant focus. And the fourth is climate tech, where we put together plastics, biodiversity. I mean, just reading Partho Dasgupta's books on the economics of biodiversity tells you that that is a very big threat. All of these currently may not have investable opportunities, but these are areas to focus on. And we firmly believe that all these are connected. You can't think of sustained water without thinking about energy consequences and vice versa.
True.
And the last comment I would make before I pass it back to you is that there is increased focus on net zero. And I think that is a point I wanted to touch upon. When we think about sustainability, it is in the broader context of natural capital, where you have to think of GHG emissions, but that is a part of the problem. What about waste management? What about freshwater use? What about air pollution? What about land pollution? What about land use change? These are factors where, as you rightly said, and Pratap alluded to in his comment, would need to see more investment. That mobility is one which has gotten more than its fair share of limelight. And some of these other sectors need focus, need attention, need entrepreneurs, and need capital. So I think we focus on pre-Series A and Series A deals, and we will get into that. And we have made a number of investments prior to the fund and now into the fund as well. And we can talk more about specific investments as we continue the conversation.
Got it. Great. Lovely. Thank you, Mr. Shah. Similarly, Mr. Bansal, maybe I can request you to talk a little bit about
Thanks, Nalin. It's really a pleasure to be here, and thanks to Climate Connect Collectives to bring us together. I represent Blue Aswa Capital, a venture capital fund based out of Singapore in India. Climate tech is one of our key focus area. In fact, more than half of our portfolio is right now linked to climate tech. We specifically look for a couple of themes within climate tech. One is decarbonization, and second is circular economy. And within decarbonizations, we are looking at both the biological sequestration as well as the, you can say, the chemical sequestration of carbon. And we have been looking at multiple streams to really invest in decarbonization as a theme. We have invested in technologies related to green hydrogen, green ammonia. We have invested in technologies. I mean, we are looking at increasingly investing in biological sequestration through bamboo, hemp, and many other ways that you can look for decarbonization as a strategy. At the same time, we have combined it with circular economy business case where we can create the waste to wealth economy, and in the process also feed into decarbonization as a strategy. So that's a larger theme, but within that we have also invested in quite a few areas in mobility space, particularly with regard to the cell technology, battery cell manufacturing technologies, and also the backward linkages for raw material supply chain for cell manufacturing. It could be activated carbon, which goes into manufacturing supercapacitors and many more things. So our larger focus is is decarbonization circular economy. One key challenge that we have come across, and this is not only specific to India but also in Asia in general, is that when it comes to deep tech uh, startups in clean tech
Mhm.
space, there are not many available to really invest. I mean, not
Got it.
ready to accept the kind of capital that one would like to invest. So we have recently initiated a new program, what we call is a Blue Aswa Labs. There we invite the innovators to come across and show their proof of concept and proof of value in our deep tech incubator labs, which we have now one fully operative in Singapore, and we are in the
Yes.
midst of setting it up in Mumbai now. So idea is to basically get the innovator, get their pilot, pre-pilot, commercial pilot, whatever you call it, and then make them ready for investment. And then we can invest from our main fund and also invite co-investors, like-minded people to come along and be part of that journey.
Lovely. So, in fact, a lot of ecosystem building efforts from your side across the sectors that you're in. Great. Brother, if I can ask you for your thoughts as well. Or what,
Thank you,
what you're
Nolan. Thank you, Nolan. Great to be here. My name is Pranav. I'm one of the partners at 314 Capital. We're an early stage fund based in Bangalore in India. We do our best work between seed and Series A. We're just closing our third early stage fund, our fifth fund overall. And with the close of this fund, we should be managing just over 270 US dollars across 70 active companies that we have in the portfolio. Our best work is in five key investment areas: consumer, fintech, digital media, SaaS, and deep tech. But we've increasingly seen that climate tech is kind of a horizontal trend that a lot of our companies, both generalist and specific, can tap into from day one. Which is why over the last half a decade, as we've scaled out our portfolio, we've become known for our work in ESG. We're the first VC fund from India approved as a signatory to the PRI, and that's become a very important dimension to the valuations that we use. Valuations not in market cap, but the valuations in terms of the business value being created, to understand how we would work with these companies and instrument change beyond just the financial dimension. So while the three mainstream capex cycles for climate tend to be food and agri, energy and power, and I guess transportation and mobility, we've seen that our companies in all of these mainstream areas have become, I would say, standard setters for how you can be more climate conscious. And as well as now with the deep tech focus that we have, we're seeing very interesting new assets being built out of India by people with the domain expertise over decades and with technology that can go global from very early on. So it's a very exciting time. We're looking forward to the new decade and certainly doubling down on our focus on clean tech.
Awesome. Thank you. At the one of the last points you raised is something that we'd love to kind of dig down deeper. You mentioned that people with domain expertise becoming entrepreneurs in the space. I think it's very particular, unique to the space, and it's much needed. So we'll get into that later as well. But great, thank you. So very interesting fund structures, of course. So two of these two funds here are dedicated, in a way, dedicated climate funds. So you're structuring for the things that requires maybe longer timelines, etc. And Pranav's fund, of course, is diversified but with a deep dive focus, which is very well suited for climate as well. Maybe a quick maybe a quick segue into understanding. You already alluded to this a little bit. What your outlooks for the specific subsectors within climate tech? And Mr. Shah, again, maybe I can start with you. So within the broad areas you look at, what are your outlooks? Which are you most bullish about, for example?
Sure. I mean, I think we have a positive outlook on almost all the four sectors. But if I were to prioritize, I would say in energy, looking at energy efficiency, looking at energy transitions. And we have been looking very deeply at global energy transitions. If you look at France's transition to nuclear, Brazil's transition to biofuels, Iceland in geothermal, and India's in solar. And then looking at the trends, which are the recent announcements, either if you look at the SATAT program, which is sustainable alternative towards affordable transportation, talking about biofuels, which I think what Satya alluded to, or you talk about the 20% of mix that is required now from ethanol in the and you're discussing on
Right.
hydrogen. We have already invested in a hydrogen company, but we are taking a deep look at some of these energy sectors, which I clearly think are likely to dominate the space. And I do think that we will create some large companies in this space. The second is a focus on regenerative agriculture. I think we have seen too many companies or a number of companies doing supply chain, which I think, I don't want to say passe, but it is now a known, I mean, it's like connecting farmers to, various other suppliers is something that is being done and is a well-developed model. But I think, people forget that the top 24 inches of soil, topsoil protection is key. And that has implications for land use change. Some of the companies we are supporting in data analytics, one, which is, the comment is that you can't manage what you can't measure. So one of the companies I play a very active role on is a company called GIST Advisory in Switzerland, which is interestingly run by an individual called Pawan Sukhdev, who won the Tyler Prize for the Environment, which is equivalent of the Nobel Prize for the Environment in 2020. I sit on the executive committee, and I'm actively involved in how do we democratize sustainability on a global basis. I think I want to say that we sit in Mumbai, but our focus, our ambition, and our investments are global. And we have the connects to make it happen. We invested in one of the earliest EWF Energy Web Foundation, which is like a network, if you look it up in terms of disintermediating utilities, formed by the Rocky Mountain Institute, so I think working with large institutions on complex problems. I think our thought is a theme is that, look, we don't want to make things complex, but we don't run away from complexity. So the amount of work we are doing in some of these deep energy spaces, as well as in plastics, I mean, some of them may mature into investments 6 months down the road. But we begin with a lens with which to evaluate. So we kind of know the focus of what we want to look for, as opposed to just evaluating incoming inquiry. And we are seeing some interesting companies in agriculture as well, and working on many different, one other area, as Anna Satya mentioned, I mean, mobility is number one, but you can't forget the decarbonization of steel and cement. And if you look at cement, I mean, limestone as CaCO3, when you use that, you're emitting a lot of carbon. The third is buildings and building management and structure, which is the third largest consumer. So all of these are deeper problems requiring a patient mindset, deep thought. When you talk about deep tech is not SaaS alone. Deep tech is energy deep tech. You have to think deeper. You have to work with the right set of partners globally and in India and at universities and in industry. And complexity requires a team of people to come together to form solutions. And that is, I think, what we are aspiring for. And we are I would say we are very positive about the space in the next decade to see that it will lead to two things, investable opportunities with positive and significant risk-adjusted returns, plus the satisfaction of having significant positive externalities. I mean, anybody who has not read the IPCC report in August or has read it and is sitting aside and waiting for the world to do things is actually sort of mistaken in terms of how serious the problem is and not understanding the cost of inaction. So, I mean, I think, more entrepreneurs need to focus on this, as well as more investors need to focus on this. And other areas like water, which is very important to us. I mean, the company that I was talking about is Drinkwell. And we supported Viatech for 10 years. I mean, we are an investor pre-IPO, and today it's become one of the top companies in the world. So these are the kind of, non-mobility companies that also equally need attention, time, mentorship, support, and capital. And that is what we do. We said, look, we are not passive investors. We build domain expertise. We work with companies which have founders who are willing to work with us because we bring a lot of expertise. I mean, I have 25 years of experience in global markets and the last 8 years spending a lot of time in climate and clean energy and thinking about things very deeply. So we want to bring that to the equation and say, look, the color of money is green, but it is not only the color of money, but you need to see who is it that is going to help you grow to the next level. And that's where we want to play a role with the entrepreneurs in making sort of capital returns, but also making a difference.
Great. A lot covered in those few minutes. I mean, you're clearly looking to solve even the harder problems
Yes,
in steel, cement,
absolutely. We're
which are
thinking about it.
deep
Yeah,
problems. Yeah,
yeah, absolutely.
exactly. I mean, the other interesting thing for us, of course, is you mentioned data analytics. So I think that's a cross-cutting theme that we also seeing interest in. In fact, AI for climate is a key interest for us. We also, I mean, without wanting to plug anything, but we are launching a climate data incubator this month, actually. So I'd encourage the audience
Sure.
to follow
So
more
Nalin,
details on that.
since you mentioned data analytics, I'll just mention one last company
Right.
called HST Powers, which is a company
Sure.
we funded in 2014. So today they are looking at solar park optimization. Their software has been used to evaluate 7,500 projects across 100 countries and amounting to 300 gigawatts. So that is a kind of scale that
Yes.
can be achieved. Sitting in Mumbai, we can do
Yeah, it's
things
amazing.
internationally as well. The geography of India doesn't define my boundaries.
No, naturally. And they've been around. We know HST
Yeah.
from our solar days
So
in
I'm an
Indian
investor in
founder.
them from
Great.
very early days. Yeah.
Very nice. Excellent. Before I come to you, Ms. Bansal, I'd just like to tell the audience we can start putting in questions in chat or in the Q&A, and then we'll soon get into Q&A as well. But yeah, Ms. Bansal, if I can get your perspectives on the outlooks, on individual sector outlooks from your side.
Yeah, I think the overall investment pool towards climate tech is increasing day by day. There is a significant amount of institutional intent to invest in the sector.
Right.
However, there is a little less action than what is currently being projected on the ground. And
Got
the
it.
reason could be twofold. One is there are not many enterprises ready to take that kind of institutional capital, which is currently seeking to be deployed. The second could be that the institutional framework to have the right set of, you can say, uh, ecosystem that is required to invest in climate tech is to an extent in a very evolving stage right now. Both are responsible for it. And I'll give you our own experience when we were trying to build the themes that we looked at decarbonization as a theme. And of course, there are technologies required to capture the CO2, but then what do you do with the CO2 captured? And what can you do with that? Can you utilize that, or can you sequester that? Sequestering has its own cost and challenges.
Right.
We focused on utilization, and you look at any chemical pathway of utilizing CO2, you ultimately struggle with the large scale utilization unless you have a hydrogen solution around it. And when we started looking at hydrogen, of course, a lot of people have been talking about green hydrogen, but green hydrogen in the current form does not solve the problem, because the best available technology for green hydrogen is electrolysis, and
Right.
energy efficiency issues. So that's the reason it has not come
Right.
into the mainstream. So then we started looking at, okay, what are the available technologies which can make the hydrogen green but still very energy efficient? And that's where we started looking at alternatives to electrolysis to produce hydrogen. And that led to finding the innovators who can be hand-holded, piloted, and then that led to our setting of the lab in Singapore to really pilot some of the technologies. Similar way, when we
Got it.
started looking at air pollution. Now, air pollution is a global problem. It's a global challenge. Everyone is struggling, irrespective of the developed world or developing world. I think many of us, we believe that this is more of a developing world issue. But even if you go to US today with a forest fire all around, I mean, they're equally struggling.
I agree. Yes.
I live in Singapore, and we still have challenges of pollution because of every October and November when all these palm plantations are being burned around, and in Singapore suffers a lot. So this is a global phenomena. Now look at the solution available to control air pollution on any large area or outdoor air pollution. There are hardly any. The moment you want to set up a smog tower, you have challenge, because the amount of capital cost and the operating cost to run a smog tower is quite prohibitive. So we had to look at we had to look at alternatives, and we were really, I would say, lucky enough to find out an entrepreneur who happens to be based in Bangalore, and they have a great solution for air pollution control on a larger space. So just imagine a Wi-Fi like device We have Wi-Fi routers at home, and we are able to get our network wherever we are there at home. Just put a Wi-Fi like router, and as long as you can get the signal of that router outside, your air pollution can be reduced from 50% to 90%. And that one single router can take you to almost close to 20-kilometer radius. Now, the moment you have a solution like this, the company that I'm talking about is a company based in Bangalore called Devik Earth. Now, our idea was that if there is such a significant technology available, why can't it be taken global? And that's where we started working with the founder. And today we are proud to say that technology has not only gone live on a large-scale commercial implementation with a plant site as high as 1,000 acres, but also it's attracting a lot of global attention. So look at each of the challenges and see how best you can take it from you can say from a technological roadmap to a commercial roadmap, and then scaling and the growth journey of it. Look at again the EV space. Now mobility is attracting a lot of capital. Look at all the startups in India alone. There are dozen plus startups looking at the mobility space, but all of them are at the most in looking for battery manufacturing or battery assembly in India. Almost 100% of the cell is coming from outside India, and we have got a significant geopolitical challenges around sourcing the cell. Now, what we need to look at again in the space is, can we really look for a technology which can manufacture cell in India? And the bigger challenge is not only manufacturing the cell in India, but also to get the raw material supply chain, which goes into cell manufacturing. So again, that has got a lot of, I would say, miles to cover. So when you start breaking down each of these things, I think there are tremendous opportunities, possibilities, and opportunities that we can link together. I'll give you one more example that there has been Samir mentioned about it, saying about the biofuel issue. Look at the whole biofuel journey. I mean, most of the biofuel work in India and outside India has largely happened around ethanol and some other blended fuel, which we can mix it and we can basically reduce the hydrocarbon fuel around it. But the bigger challenge is, can we replace the hydrocarbon fuel with biofuel as a standalone source of it? And that led to, again, a second generation biofuel, which is as good or equivalent calorific value as the hydrocarbon fuel is. And that led us to, again, identifying a company here in back of Mumbai, I mean, in Pune, started by a couple of, 4 founders coming from corporate experience from Cargill and Tata's. And we recently invested in a company called Green Juice. They are producing second generation biofuel, which can go straight away into the car or engine without any retrofitting required. So idea is that you look at each of these segments and then you start identifying the technologies, the founders, and the businesses, so that you can build, I would say, brick by brick. Still a long way to go.
Right. So it's a very interesting approach, actually, and I've heard you say this before, that you try and see what the complementarity is between across the value chain are between your portfolio. It's very interesting. And I have to say, the first time I read about Devik Earth, I was pretty astounded. I mean, I was amazed. Such a technology coming out of India, it's pretty heartening.
Nalin, just one point I wanted to add. I
course.
think I agree with what Satya is saying, but just one statistic is that today 81% of India's mobility-related energy needs come from imports. We also have a 380 gigawatt, base of energy in the country, largely coal-based, which is 60%, 65% utilization rate. So the question is, one of the second-order benefits of EVs is that you are reducing the import of fuel, because you are charging it again. It's not fully green. You are using the coal or the grid mix. But at the same time, when we start focusing only on energy cost and not talk about energy security, I think that, to my mind, is a big error of judgment. I think just one point I would make on the batteries is that, look, there were 4 gigawatt factories announced on lithium ion a few years ago. None of them have broken ground. And there has to be a logic to it. And perhaps one thought is that there has to be a move away from rare metals and mining to finding other solutions. See, hydrogen as a solution is a decentralized solution requiring no rare metals, requiring no mining. and can be done at and electrolyzers also. I mean, largely globally you use alkaline electrolyzers, but PEM is coming into place. Solid oxide fuel cells are coming in. Solid oxide fuel cells require 800 degrees Celsius. PEM requires 300 degrees Celsius. Alkaline requires 90 degrees Celsius. I'm giving this example because there's a cost and benefit. You have a heating cost to producing an end result. And even biofuels, I mean, if you can create, we have been working on a large project with the government through United Nations Environment Program to see how the paddy straw waste that is burnt in Punjab every year can be converted into fuel. And I think one of the core principle has to be local production, local consumption, which means can you create an infrastructure where you create CBG from biofuels, and that is used to power cars. Today, out of 65,000 gas stations in the country, only 2,000 are giving CNG. Why is that? Because the supply side is extremely constrained.
Exactly.
You have to open up the supply side to get the OEMs to make CNG vehicles, and there will be different solutions. I mean, the EVs can work for two-wheelers, but for larger vehicles like trucks, unless you use hydrogen, you can't work through because the lithium titanate as a solution is extremely expensive. So I think there are multiple. I mean, I think fossil fuels will not be replaced by one technology, but there will be a multitude of answers depending on the use case. I think that's perhaps the point I was trying to make.
No, fair enough. I think you're right. I think all of us are keen to see how the hydrogen economy also takes shape. There may be use cases perhaps more or early on in chemical feedstocks versus transport, and that's. I think you're right. It's an industry to look out for. Pranav, if I can request you to come in. Of course, if anybody has been to the 314 website, you'll know that Pranav's firm publishes great reports, and they think through their thesis very well. I'd encourage all of you to go ahead and read those. So Pranav, but maybe we can get some from you as well.
Yeah, thanks, Aline. So when we started Venture in 2011 as a group, the first fund in our group was called Aring Capital. Back then, there was just a handful of VC funds in India, mostly software, e-commerce, some of the more basic technology players. We looked at the whole ecosystem and said that there's a role for capital in accelerating very obvious business models and building the first of their kind here. But there's also a role to take a long view on certain things that just need 8-10 years of patience before they're even viable from a pure growth return standpoint. So we built a lot of patterns around what can support hypergrowth from the early stage, which is what we're supposed to do as VCs, but also how we need to work with patient capital on another side of our investment criteria and build these unique assets that if we don't do it are not going to get built. Right? So on the high growth side, from day one, we've had our fintech companies, our unicorns, our D2C brands, our digital media platforms. Those have obviously cleaner paths towards scale. They're more mainstream. There's more capital availability, and the problems they're solving are very intuitively easy to understand. Right, they're daily living problems. But in parallel, we've been fortunate because we have a fairly patient and widespread LP base to be able to allocate a certain portion of our funds, every fund we launch, towards solving deep tech problems. So as a generalist, we've had to buy the generosity to do the things that are hard to do, solve the problems that are hard to solve. And for that, of course, we need to be technical ourselves. A number of engineers on the investment team. I'm an electrical engineer by training, with a passion for energy and power systems. That's where my training is. And I've been looking for example, something in the battery storage area for over 9 years now, and finally came close a couple of times. But now finally have invested in one company that's taking a 13-hour charging cycle and making it 15 minutes. Very interesting new company for LCV battery modules. So these are the kind of innovation we're seeing in India consistently. But again, it needs a very different mindset to be able to work within the constraints of not having all the IP here. Other countries are far ahead in terms of how much their government has supported CapEx. We've had obviously long-term problems with CapEx funding here in India, which are now changing, but it obviously delayed. So in that sense of the world, where does VC also play a role is a hard question to answer and changes every year. So on top of already difficult scientific and technological problems, if founders have to solve for these ecosystem challenges, it becomes really hard to actually build anything of value. So that's why we see that climate has so far been a very specialist domain. You need people with long-term experience like Mr. Shah, Mr. Bansal to be attempting these things. And again, they think in terms of decadal cycles, which is good. But for venture to get there soon, there has to be a different type of capital available for the fundamentals, and then venture comes and plays a very important role in the hypergrowth phase. So I think that marriage is what we're looking forward to happening this decade. The good news is that companies like Yulu, for example, in our portfolio, like Licious in the food and agri space, are indirectly or directly already pulling that mainstream capital into important areas and trying to make a great business, obviously, fast run rates, high growth. At the same time, make sure the environmental impact or the climate benefit is a high priority from day one. So you need to buy that generosity. It's slack that you need to earn. We hope again that attitude changes this decade, and hopefully capital is prioritizing this area from day one. So our newest fund, for example, is to conclude some of our first deep tech investments. The power company I mentioned is one. And the second one is a mobility company that's building battery-powered flight systems. So hopefully one day could transport heavy loads, including people. So we see that the fact that we can have high growth is now giving us that opportunity to do the other stuff. Now the other stuff is becoming a high growth opportunity and literally changing every year we're doing the business. So that's good to see, and we hope that we can play a small role in that accelerator.
I think just one point for Pranav is that sometimes decades don't happen in decades, but happens in 2 years as well. So I think we are seeing at least 5 of our companies which have given multiple returns in less than 3 years. If I were to say Ion Energy, which is one which we invested in, again, like yourself, we have been looking at the mobility space, deconstructed the battery to say, look, the cell is the domain of the billion-dollar, large players. Form factor, I really don't care about too much. IoT is perhaps more mundane. But if you can look at energy efficiency, thermal management, etc., and you can build it, this is the first company that has attracted the Amazon Climate Fund. It's the first Indian venture to have invested in that. When we look at solar, we said, look, I don't want to invest in solar farms. We let it be the domain of the pension funds who will invest in it for the stable long-term return. We invested in a company called Vari Energies, where I was on the board for 6 years. They are launching a public issue, filing a DRHP, which will give us a multiple of the amount invested in terms of where we stand. HST, which Nalin mentioned, with the criteria, we are getting some of the world's largest investors interested in them. So where I would have a slightly different view is perhaps a decade ago, energy investments would take a decade to provide returns. I think the timeline has shortened considerably across agriculture as well. And we think that as more entrepreneurs get in, the world focuses more on what is a problem that needed to be solved yesterday. And every day of inaction is expensive. I don't think that the returns will take decades. It will come much faster. But the story has yet to play out. But that is my perception. That is my view. That is what we tell our LPs, and that is how we run our business.
Very interesting. I think that's I think we're all in the same boat in many ways. Pranav, thanks. You mentioned a lot of things, and I do want to take off from one of those. And I understand there's a bunch of questions, so we can quickly get into questions. But just to round out the discussion, maybe get a view from everyone, and you can combine these two things. But Pranav did mention earlier on the fact that there's some domain expertise required. So I'd like to just hear a little bit from all of you what you look for in a founding team, for example, and also talk about some examples perhaps of great founding teams or great investments that you made. So maybe
for sure. So I can take that first. Certainly in terms of building, on the frontier, which is a lot of what climate tech is going to demand for investments going forward. We're going to need people who come from those domains, who are able to recruit from those domains. We're going to need highly specialized people all working together from the first day, because you can't say I will recruit these people 3 or 4 years out. You need all of them working with you on day one before you even get funded sometimes. And therefore, the burdens on team, on people, on domain expertise, especially for some of the harder problems in climate tech, is as high as it's ever been. But the good news is that now with capital finally being available, the ability for these founding teams to be able to attract that kind of talent early is certainly heightened. And that's a good thing, obviously. So even the companies we're doing now, the venture view for some of these deep tech slash whatever you call them, IP heavy companies was that okay, put a 250K check and it's a hedge and let's see if it works, whatever. Now the hedge is a 1 million commitment, right? And that's big. That's fantastic because the cost hasn't changed that much over the last 5 years, but there is now more capital available to take those risks. So I think venture's attitude towards domain expertise is becoming much more capital friendly, and therefore the quality of the teams that are starting up now that we're seeing is the highest it's ever been. Now, some good examples. There are some problems that you cannot do as a generalist. So one of our favorite examples as a specialist team is a company called Bugworks. When we surveyed the entire medical technology or biotech landscape in India, we found that most of it was very unstartup like, and therefore it was hard for us to do anything as a venture capitalist in that space. Maybe pharmacy delivery and so on, the companies that have become big now, but that's about all that could be considered mainstream. But we found this very interesting team of scientists in Bangalore. They come out of IISc at CCAM, and they were attempting to solve something that hasn't been solved for a long time, for at least 48 years, which is find novel antibiotics for superbugs or drug-resistant bacteria, for which today we don't have a cure. And if you're infected by any of these 48 species of superbugs, there's a 95 to 97% mortality rate. In perspective, the COVID issue, the virus was at best 1 to 1.5%, right? And you saw the damage it created. So the interesting thing about problems like this is that typically you think of these as you need 15 years, $1 billion, large pharma capex, hundreds of PhDs in wet labs, poisoning rabbits. That's the stereotype of drug discovery today. But what these scientists have done in 3 years with a combinatorial chemistry, molecular biology simulation platform, they found 4 new assets in multiple phases of trials now. Toxicity trials are completed, and done all of this raising $10 to $15 million of equity only.
Wow.
And that's fantastic because again, they've completely disrupted the traditional chain of drug discovery. So that's one example. And if it works, if this works, if something so difficult is able to put those pressures and get growth much faster and upfront, certainly there's a wild new wave of hope for climate tech, for other hard areas, for material science, for example, which honestly, in my personal opinion, India doesn't do much of. We should be doing more of. So there are a lot of interesting things that are derivatives of this kind of attitude, and therefore the overall macro trend is that more domain expertise has the confidence start attempting hard problems, and that's definitely something all of us want to support, and all of us are looking forward to this decade.
Sounds great. Thanks, Pranav. Mr. Bansal, similar question for you. What you look for in a founding team? Any interesting examples that you have as well?
See, one of the core, I would say, building block that we look for in any investment is a combination of course, the capital, the technology, and the market linkages. And can the founder bring all three together? That's the desired state that we always look for. However, we are not able to get that in the team all the time right in the beginning. So here, let's say in our case, when we basically back an innovator during their, let's say, technology readiness level 4, 5, 6 stages, and we want to build that innovation to the market, of course, there's a larger focus on getting the technology validation done, at least a pre-commercial or commercial stage. Now, if the innovator is also capable to lead it commercially, that's the best thing to happen. But in case you don't get, then you bring another set of team which can work along with the innovator and bring the right combination of techno-commercial skills to take it to the market.
Sure.
I think that combination we need to look for.
Got it.
However, since a large part of the ecosystem is yet to evolve, we have to at times be creative ourselves to look for even enterprises which can solve these problems at larger scale. And I'll give you a classical example that we recently came across. When we were looking at this whole EV space and the challenges around the cell manufacturing and supercapacitors and all these things, we spoke to quite a few of these supercap manufacturers. And we realized that one of the key challenges they are facing is the cost of raw material, particularly activated carbon, which actually stores the energy. Okay. And the challenge. So look at the challenge of supercap manufacture. There are very few companies which are supplying the supercapacitor grade activated carbon. And here, as Pranav mentioned, that there is a dearth of work. I mean, the real work to happen in material science space. Here we reached out to some innovators who said, hey, we have the ability to produce activated carbon, but then we need some amount of further work to be done. So we basically funded a team based in Singapore, and there they have been able to now produce activated carbon, which is of supercapacitor grade out of orange peel. Okay,
Wow.
so it is a west to wealth story, which is leading into the raw material backward supply chain for producing supercapacitors at a competitive price, so that the EV revolution can take shape. Now, you look at the whole ecosystem connect, and how various interlinkages can be played together. And you look at each of these challenges, and if you can start connecting the dots, you might have to go back to the lab and identify a right innovator, or maybe a combination of innovators. You have to identify a commercial capital provider, which could be a fund of our fund, or could be a partner fund of ours. And then we have to also look at market linkages, because sometimes some of these things requires an institutional building towards market linkages as well. And we have to bring all these multiple threads together, somehow make it work in a structured manner, so that the enterprise can be created out of it. Now, this may not be the challenge as we do in some other, you can say, well played out themes in SaaS and the technology space, particularly the IT space. But this is particularly in climate tech, it is more of an ecosystem build up that we all need to do together, within our own network, and partnering with other networks, like what Samir and Pranav just mentioned.
Got it. Thank you. I think that's pretty insightful and very interesting that you've gone to industry. You've identified a very specific problem that industry needs solved. So you're taking care of demand side, and then you in a way trying to find the right entrepreneur and the right solution that can plug that demand. Great. Mr. Shah, I'm going to come to you now.
I think a lot has been said by Pranav and Satya. So I think in terms of what we look for in a founder, a lot has been said, actually, in terms of critical to have domain expertise and critical to have a passion to succeed and passion for the space. I would rather give you a couple of examples as to what made us invest in a company. I mean, the first one I will mention, not in mobility, but a company called Drinkwell, where we founded in 2015. An entrepreneur called Minhaj, looking to solve the water problem and saying, look, arsenic and fluoride are tough problems to solve. And, government has recently realized that RO is not the solution, because they have banned the use of RO where TDS levels are below 350. So with them, and I think this also, Nalin, plays to our theme where we actively drive value. So with them, we work together to implement a solution in Assam, where arsenic levels were 450 ppb, whereas the WHO standard is 50 ppb. After that system has been running now, in January, this quarter, January to March, we did 175 systems for PHED. So the point is that if you work with an entrepreneur initially to solve a tough problem, it's like always the first one is harder to solve. But we were able to do 175 systems. Last year, I went with him to Dhaka, where I'm proud to say we are the largest supplier of clean water in Dhaka, running 400 systems in Dhaka. We are working with a large power producer in India to do 100 systems in the state of Uttar Pradesh. And this is where we actively drive value. I mean, Ion Energy now is in the safe hands of larger investors, including Amazon. But when we invested in 2017, we assisted them in acquiring a company in France, where I must say I had a role to play in terms of saying, how do we negotiate, acquisition of a tech company which can allow you to leapfrog on technology and allow you to sort of get benefit of what somebody else has done in thermal. We went with them to Delhi to say, look, we need to close this deal. 9 o'clock we began, 6 o'clock we walked away with a contract. That is how we believe we help entrepreneurs to say that, look, we are not only just giving you a check and asking for quarterly numbers. We want to work with you. We are not operating guys, but we will work with you as and when you kind of need us. The reason I invested with GIST is it's a privilege to work with Pawan Sukhdev. I mean, we speak 8 times a week, perhaps, and working with somebody who has won the Nobel Prize for the Environment in 2020. Please look up Tyler Prize for the Environment. I urge the audience to do so. I mean, there is a process of osmosis where you learn and allows you to improve your thinking every single day. And we need to get smarter about how we think about companies, how we think about deals, how we think about
Right.
founders. Recently, we have funded a company doing plant protein where we knew the founders for some time and saying, look, we don't want you to spend money on brand building. We would like you to spend money on the intermediate product, which is, like the almost you call it the B2B, if you will.
Got it.
And
Got it.
secondly, a company saying, look, can we use electrocoagulation to do wastewater management? And we are looking at, companies doing rooftop solar, where we just, signed a contract. Our CEO, who is brilliant in what he does, just signed a contract with, an arm of Rockefeller Foundation trying to do this in the state of Uttar Pradesh. So I think getting your hands dirty, digging in, working with founders, finding passionate people to work with who are solving tough problems. I tell people, if you're working in this space, it's not as we are not solving eyeball problems. We are solving tough problems. And
Exactly.
many of the
Yeah.
problems in water, even if you talk to anybody doing mini grids in power, etc., they have to be solved brick by brick, community by community. This is not something where you do an app and suddenly the world can download an app. Unfortunately, apps don't solve the critical problems in the world related to water, food. I mean, one of the things we are thinking about is Professor Dasgupta's comment when he's put this report. He's saying, look, we need to rethink the way we produce, consume, and dispose of food. Changes
Right.
cannot be incremental anymore. They have to be fundamental. And I think there is actually entrepreneurs who are thinking about this. I think capital, as I completely agree with Satya, the capital available is less, even for us. We want to, devote more capital than we have access to, but that will change over time. We are optimistic,
Sure.
positive, and determined to do this for the next many years. And hopefully, many of these returns, even EWF, which I mentioned, $2 has gotten us a liquidity at $11 in 2 years. So this is not like a decade of waiting to get returns. I mean, you know what? We are going to mirror the SaaS returns soon. So, let's watch the movie roll on.
No, that's great. All very inspiring thoughts, actually. Maybe we can move to the questions from the audience. We have a few minutes left, so I think it's a good time. There's this question on waste. So I'm going to paraphrase, but in most of the clean tech startups, there's a lot of policies involved. Government is the key stakeholder. For example, he's taken the example of the waste management sector. The question is, it's often seen as a red flag if the startups are reliant on government, right, as being the key customer. So what's the view of the investors on the panel about this B2G model, basically?
If I may add, because I've spent a lot of time on this Satat program together with Indian Oil Corporation and a very senior head called Subodh Kumar over there. So I would say that, look, by the government saying that we will buy back, the waste to energy. If you set up a CNG plant using anaerobic digestion and you produce CNG, we will buy back. So that is BPCL, HPCL, and Indian Oil, giving you a 10-year contract. That should actually be what, PPAs that companies look for when you set up programs. So I think, it is not necessarily a red flag. I think, MNRE, I think perhaps the question is coming from my other involvements in solar, where people are generally okay with a PPA from the central government, but there have been issues with certain state governments. Everybody knows with the governments I'm talking about, where there have been issues. But these will eventually be resolved. I mean, I think MNRE and the state working with sort of the right partners is how one should perceive how you work forward. But this 46 rupees at which I think the government has said, look, we will buy this for 10 years. That should give people comfort that waste to energy is a sector the government is focused on. B, it provides energy security, with I would argue lithium ion doesn't provide, and nor does fossil fuels. And a local production, local consumption model can be grown. I mean, the opportunity at scale, Nalin, is $26 billion. So we are not talking about small stuff here. And this is the technology is not that much of a risk, and hydrogen, etc., is still evolving. But like any technology, I think initially the years, solar was at 25 rupees in 2010. Where is it now? 2 rupees 40 paisa. So I think any technology will always come down in cost. and it will never be the same as the incumbent technology on day one. But with technology improvement and scale, it can clearly come down. So I think I would not see the government necessarily as a red flag, but it is a case by case. I mean, this is not a generic yes/no answer for everything.
Yeah, it's nuanced, of course. No, but you're right. We face the same problems about off-taker creditworthiness when it's central state, of course. You're right. Anyone else wants to come in, or should we take the next question on a B2G? How you perceive B2G?
No, I think Samir has covered it very comprehensively.
Right. Great. Pratap, you wanna take the next question?
Oh, yes, sure. Great. This is a question when we're talking about deepening investment into other sectors in clean tech. So the question is, for deeper technology changes around, say, steel, cement, construction materials, carbon capture, etc., we need big capital with a longer pathway to returns, and there are very few examples in India. Is this something that we could see going forward, that you're seeing coming up, the interest from the LP side to support these kinds of innovation coming out of India, or is this something we bring in from outside?
I'm happy to take that in case that helps. So, see, this decarbonization initiative in the large manufacturing setups, there are a couple looked in. One is capturing the CO2 emissions from a GHG perspective. And second is, what do you do once you capture it? The first problem, to a large extent, is now behind us, because there are very efficient carbon capturing technologies available. You can look at a company called CCS. It's a Indian origin founders, developed out of IIT Kharagpur, right now based in UK. I happen to be one of the early investors in the company. So far as carbon capturing, the CC element is concerned, it is getting more and more efficient. I believe the current cost of capture is anywhere ranging around $30 to $40 a ton. However, the second big challenge still remains. What do you do once you capture the carbon? You can't make that much of dry ice for your food, for your drinks every day. You need to have a better industrial utilization of it. And that's where some of the companies, some of the countries in Europe, they have looked at carbon CCS, carbon sequestration. But the sequestration has got a cost. I think the landed cost of carbon sequestration per ton today is anywhere in the range of $90 to $120, which is very, very unaffordable for any country, including the most developed ones. So the real challenge now lies in what can you do otherwise with the captured CO2. And that's where a significant amount of work we have been attempting to do in a limited manner, and would be happy to look at any other technology suggestion or opportunity to really look at it. So far as capital is concerned, we will be able to have a look at. We'll be able to definitely bring it together. May not be from us alone, but we can build other investment partners. We can bring other investment partners as well. But yes, this is a real work to happen. So when you look at, Samir mentioned that this recent report, which is an eye-opener for many, if you have to do something, you have to really attack this particular challenge. Otherwise, survival for humanity is at risk. Forget about what return on capital we are talking about. If we are not there, what is the fun of having the return?
Yeah. I think just one additional point. I agree with everything Satya said. But, it's not something which is, I think the critical difference is the venture capitalists or venture investors are not going to do the infrastructure projects. See, if you look at solar, I think the distinction is that, you're now moving from thin film, you have moved to silicon. Now you're talking about perovskites. Now you're talking about heterojunction. So these technologies will come from entrepreneurs. The implementation of technologies at a large scale will be where the corporations come in. So I think there has to be a distinction, even in steel and cement. Steel, obviously, when you use recycled steel, the utilization of coke and iron is 1/8 is the energy consumption. But the logic doesn't work, because India will, as a resource intensity country, will need more steel than will be available from recycling. So you will need to find other solutions where I think one very interesting company we are talking about, but since the deal hasn't closed yet, I would refrain from talking more about it. But we are saying, what if we don't have to use steel? Why can't we think of it different paradigm of building materials to say that, look, can we achieve the same end result without utilizing so much steel and cement? And steel and cement constitute 8% of the net energy used globally. So if you just see the number of startups focused on mobility, which is the number one thing, and the number of startups focused on the second problem, and the number of startups focused on the third problem. I mean, we had an opportunity to invest in a company called SMC, which does switch reluctance motors, but at that time our fund wasn't ready. They attracted a $200 million investment from BMW. But switch reluctance motors is able to change induction motors and magnetic motors energy use by 40-50%. So there are huge opportunities which are done at a company level, which is at a startup. Plus, when I say startup, I would say Series A, Series B startup. But this is not necessarily all left to the larger billion-dollar corporations. I mean, there is a role for everybody to play. And that is to what Satya said, that this has to be done jointly. It has to be somewhat academia, somewhat of startups or some founder. I think the one thing I've seen is I always tell founders to focus on a very specific problem. Because if you're diffused and trying, you can do 10 things. But if you try to do 10 things at the same time, the likelihood of success is perhaps lower. So, but people, the innovations will come. I think there is enough, of human capital in this country to drive that. And I think it just needs to be catalyzed. And what you guys are doing at Climate Collective is actually, very, very strong and very, very helpful in that direction.
Sure. So maybe Pranav, a question for you, especially because mobility is a focus. So there's a question actually on hydrogen, but I wonder if you have a thesis around hydrogen for mobility or even beyond.
Yeah, in terms of energy, energy density and so on, the science is fairly well known. There's something there for us to explore. It certainly reduces the balance of payments problem India has traditionally. But we're still skeptical because the capex required is fairly high. And as a venture investor, anything that requires government capex over a long term consistently for technology to be built on top and then scale out is a difficult commitment to make. Which is why even when we've seen mobility from the ISO venture, we typically see companies that are more biased towards lithium-ion, more biased towards assembly in India, more biased towards using ready-made components and filling out new solutions, and that filling that gap between the customer and the product versus the actual deep technology or the IP development. But I think that's a symptom of 50 years of what India has gone through from capex cycle. So if hydrogen, for example, becomes a new way to do this, because it's such an important mission for the leadership in the country today, we made, in my opinion, a deep cultural commitment to being more environmentally forward as a country. The leadership is very consistent about this. The vocabulary is very clear. Everyday people have understood the statement in a way I haven't seen before, including students. So I think if there's such a deep cultural consciousness, I hope that leads to a different way to work with government, different way to work with capex. So we're optimistic, but again, take it one day at a time.
Makes sense.
I think one little trivia, Nalin, I would add here is that hydrogen has the highest specific energy with a very low energy density. It has to be stored at 75 bar pressure.
Sure.
But 1 kg of hydrogen is equal to 150 times the regular battery in terms of storage capacity. And when we think of hydrogen, we can't only think of production. We have to think of production, storage, and transportation. All three are, and you have a very large company, Reliance, sort of making a big statement. So I think these large investments will drive down the cost. I mean, they have all this green, blue, gray. This is all, what is the energy source to build the hydrogen? But the electrolysis process is what is, I think, either see to the 98% is using alkaline, but that is not very efficient. So, but proton exchange membrane will come. The cost has dropped from 2,500 to 1,100 in 18 months. But at some stage, just like solar has had higher adoption, this will also have adoption. So I'm optimistic, but it'll take some time, Stations have to be built. Yeah. In the US, there are 45 stations with 43 only in California. So you can tell the US is not focused on hydrogen at all. So anyways.
No, US is not for sure. Correct. Great. So we are at the, obviously we've gone beyond time. So there's one more, I mean, there's a few interesting questions, but I think we should close now, right? Pratap, I think maybe a good time to close.
All right. Yeah, first I'd like to thank all three of you, Mr. Shah, Mr. Bansal, Mr. Pai. This has been great.
Yes.
Without your support, it's very hard for entrepreneurs, many of them, to get to the next stage. And I think we all agree that there is a tremendous potential in this space. There are lots of startups and entrepreneurs on the ground, and secular trends suggesting that this will only increase at an exponential pace. I also want to thank Nalin for moderating this panel. It's quite great. Nalin is a clean tech expert. In fact, this morning he had another role of running Investor Masterclass as part of IIC to share a lot of the research that we've done with IIC on the report released yesterday, as well as, of course, the work and insights we get dealing with investors such as the panel here and others in the ecosystem. So I think everyone, I'm sure, has really enjoyed listening to you. We are, for those who couldn't make this event, we are going to put this on YouTube after and share this with the wider community, because I do believe that one of the questions, oftentimes, one of the first questions people ask us in our accelerator programs is, how do I raise funds? It may not be the right question to ask, but it is definitely a key question for entrepreneurs, many who do not come from this background, for example, for finance or investment, etc., and really just working on products, trying to understand and learn skills like fundraising, which is not as easy as it sounds. So I think the wider Climate Collective community and the wider community here in India and South Asia will enjoy seeing this recording as well.
Yeah.
So thank you again, and we do hope to invite you again to other events that we have in the next few months, and talks and other ways we can engage you to help strengthen this ecosystem.
Thank you. Thank you for inviting us. Thank you.
Thank you.
Thank you, Mr. Shah. Thank you, Mr. Thank you, Pranav. Bye.